Good afternoon, everybody. This is James with 77 Financial Group. You're listening to 15 Minutes of Finance, where in the next 15 minutes, I bet I can get you excited about investing. Let's do it. All right. Happy Friday, everybody. We are back at it again. We got some investment news. We got a quote from Buffett himself. We got some stuff going on. Really, though, the market did not move that much this week. So pretty flat overall, but we got a great term of the day that Brandon and I, we just got back. We were at a small business event and we spoke with hundreds of small business owners. Exhausting, right? But we're getting an idea of where they're at, what's a priority for them, where are they at with their investments, with their finances, what's pain points, what's important to them, all of that stuff. And one thing I took away from all of it was about patience. And I was just looking up Warren Buffett quotes about patience, and one in particular struck me as just like the ultimate wisdom bomb you could give somebody. It's very, very simple, okay? And I don't even need to look it up because I got it by memory here. But Warren Buffett says that the stock market is a tool to give money from the impatient to the patient. Okay, very, very simple. I'll read it again for you, okay? The stock market is a device for transferring money from the impatient to the patient. Okay, very, very easy. Nothing exciting about that, but filled with immense knowledge. Okay, it's incredibly thought-provoking, from my end at least. I know from yours you're probably like, oh, okay, it's easy to say when you've got $500 billion. But realistically, I mean, all you have to do is wait. And obviously not waiting with a bad hand, but if you did the right things, if you're 80% in the S&P 500, you've got 10 to 20 years left, and the more the better. But if you could just be patient with what you're doing, you will see so much reward, and you'll take the impatient people's money merely by doing what they can, which is waiting. Okay. Let's get to the news. All right. I hope you guys are very patient. That was the one thing I took away from this weekend, is that the most successful people in business, in life, in investing, they just were patient. Okay. They just waited. And that's such a hard thing to do, especially in a world where immediate gratification is so demanding. We just want it now. It's like a drug, right? So if you guys can fight that, you will be so much better off than anybody you grew up with, you're competing with, anything, okay? If you can just be patient. All right, let's talk about some news now. You guys got my Warren Buffett quote nailed and down. Okay. U.S. equities were mixed at midday as uncertainty about the fighting between Israel and Iran led investors to be cautious ahead of the weekend. The Nasdaq fell, but the Dow Jones Industrial Average rose, and the S&P 500 was little changed. Kroger was the best performing stock in the S&P 500 as the biggest U.S. grocer beat profit at same-store sales and raised its same-store sales guidance on higher pharmacy, fresh food, and e-commerce sales. Shares of CarMax gained after the largest U.S. used car retailer reported better than expected profit as revenue from sales of retail vehicles increased. Mondelez International, ticker MDLZ, I've never heard of them, were higher on an upgrade from Wells Fargo, which cited elasticity on chocolate prices, a lower inflation outlook, and the Oreo maker's favorable valuation. Okay, they make Oreos. Accenture shares declined when the consulting firm warned that the economic and geopolitical uncertainty is causing CEOs to hold off on hiring consultants for some new projects. Shares of Smith & Wesson brands tumbled when the gun maker posted a drop in both earnings and revenue, and warned sales will likely continue to slow because consumers are cutting back on discretionary spending. Amazon shares dipped on a word of British regulator who are looking into accusations that the online retail giant didn't pay food suppliers on time. That's a very rare thing to hear about Amazon. Oil and gold futures dropped. The yield on the 10-year Treasury note was little changed. The U.S. dollar gained on the yen, fell against the euro, and was little changed against the pound. Trading in major cryptocurrencies was mostly lower. Okay, see, I told you guys it wasn't going to be that exciting of a weekly news report here, but the Fed did have a meeting on Wednesday, so there is something to touch and talk about real quick. Rates aren't dropping, and I'll say this, at least not till July, right? Powell is notorious for being a data-driven rate guy, meaning it's what the data says, right? It's never about forward momentum or culture or relevant economic environments, okay? It's all about the data. It's what's the data telling me. This is like the first time where he's not being a data guy, which really bothers me and does make me think it's a little political. Also probably doesn't help that, our president is calling him a loser and an idiot every week, but he's probably like, okay, fine, we just won't do it. We'll keep it steady. We'll keep the pressure on even more. Part of that maybe is because he wants to see how the war will play out. However, the data is saying you should drop the rates. You should absolutely drop the rates with the way the data is going. Jobs reports have been good. Inflation has been steady. We have data that suggests a rate probably should have happened a month or two ago. Okay, so we're already now deep into this. Let's wait and see. I don't think Powell can wait another month. So my guess is July is going to be a rate drop. The second that happens, going to be a bunch of money just influxed into the market. I think there's about $7 trillion just on the sidelines right now. And what I mean by that is it's not invested in anything, right? It's in money market instruments or less from retail investors. So that's just cash, right? We're not even talking about treasuries right now. In treasuries, there's way more than 7 trillion. I think there's like 25 trillion in treasuries. To give you an exact number, I'd have to look it up. But so there's 7 trillion just waiting to see what's going to happen. The second that happens, that's going to inflow into the market. And again, assuming there's no nuclear bombs, no major world leaders dead, or we're invading other countries, cough, cough, China, Taiwan, which if they did it right now, that would be probably the best time for China to do it. So that's why I'm a little terrified, hoping that we don't add that to the list of wild war things happening on in 2025. But assuming all those things equal, okay, we're probably going to get a rate drop, probably going to have a big influx into the market. We started this year saying we believe it was going to be at 6,500 to 7,000. I still feel that way, okay? Even with the 1,000 point drop that we had because of the tarifier, there's a new tariff in town. Even with all of that going on, we still believe 6,500, 7,000 in that range is where we're going to be. And guess what that would be? All-time highs. Okay, all-time highs. Great for everybody invested right now. Not so good for people who they want to start investing. Okay, if you're thinking about getting into the market, I could tell you right now, yeah, sure. Look, we don't really know what's going to happen. Maybe we want to just ease our way into it. But the truth is, if we're waiting until good news happens, it's already going to have had its effect. Okay, it's already, you're missing it, right? It's like trying to jump on a moving car. Well, the car was parked right in front of you and you could have got into it, right? We want to try to avoid the moving car philosophy. We don't want to jump in a moving car. With that said, things have been really flat right now. So again, not personal financial advice, but it is my opinion that now if there was a time to invest as far as what's the best time, it's going to definitely be better than 3 months from now. And then that's my professional opinion for you. If you guys were going to take anything out of this, that would be it. So rates, big deal. But now we got to talk about the war, right? What's going on? What are we doing? Why does America keep getting involved in battles and confrontations that are not our own? Now, look, I will say I'm a big believer in the biggest person on the block trying to help the small guy, the little guy. I'm all for that. I'm also for us trying to put our own interests first. And if Iran does, I read this morning that they have enough enriched uranium. Okay, they have enough. If that's true, and they already have enough, and Israel and America are going in there and basically saying, well, you can't have any more. Like, we have to destroy your nuclear programs. They've already done the damage. They already have it. It's more at this point, if that's true that they have the enriched uranium, we're essentially putting them into a corner to use it, which that would be the worst case scenario for everybody. So if they do actually already have the capabilities for a nuclear bomb, the more we keep fighting in this scenario and we keep punching them while they're down, it's just going to cause them that fight or flight response, putting an animal in a corner, right? Like, man, we don't want that. That's the worst case scenario. Now, I don't know if that's entirely true, if they've found a way to weaponize it yet. I just heard that they have enough to make one. So hopefully this can get nipped in the bud quicker than it's looking like. This is looking like, I mean, Trump said he's going to take 2 weeks to decide if he's going to help Israel with the bunker bombs. I mean, and just to give you a little bit of context, we're pretty much the only country in the world that can hit, I don't remember how far they said. I think they used kilometers, so I definitely don't know how far down it was. But there's effectively a laboratory underneath Iran so many miles beneath the ground, or kilometers. I don't know if it was even a mile long, but we're the only ones that have a bomb that can hit that. So now we're going to take 2 weeks and wait to see if we're going to implement that or not. I think time is not our friend in this scenario. And if I was Iran, I would feel like I was being forced to, like, you're going to force me to use this weapon. Now, I'm not trying to get political, just trying to show you that all of this stuff has to do with your finances. Okay. And again, we said it last week, big believer that wars and markets, they have zero correlation really. If a market happens, there's usually a very quick, sudden dip, very much a buy the dip moment, and then things rebound, even while the war's happening. I mean, look at Russia, Ukraine. That's been going on for a really long time now. There was initially oh no, what's this going to do to global markets? And then it bounced right back. Okay, this is, again, it's a very similar situation. The only difference is that now this is an oil-based area, and Iran is friends with Russia and China. We're putting our enemies in a position by helping Israel to help Iran, right? Almost nobody likes Israel. I don't know why. Okay, that's a whole other story. None of that really makes sense to me, but we're pretty much Israel's only ally. Iran doesn't really have any good friends, to be entirely honest with you. So China and Russia might come to their help. That might cause more global tensions. If that happens, I actually think that's good for us as investors, because that's going to be another buying the dip moment. The worst case scenario is the nuclear talk. As long as war is happening below that scale, every drop I am buying, right? Even if it's $25, it's like, all right, let's just dollar cost average into this bottom here. And by doing that, you guys will take advantage of the dips. Okay, I do want to end with this. There were, at the convention we went to, the Small Business Expo, an immense amount of insurance salesmen. I can't tell you what makes my blood boil more in this industry than insurance salesmen calling themselves financial advisors. Okay, it bothers me to no end because they don't even know what they're talking about. They get so caught up in the pitches and the sales scripts that they just believe what they're being fed so that they can sell these investment products. There is unequivocally no insurance product, none, that is a better investment than a great diversified portfolio. Okay, even if you're ultra high net worth. Now, a lot of these salesmen will be like, well, you can only put so much into a Roth IRA. Like, why wouldn't we, also want the tax deferral of the IUL policy? If you have an insurance policy, please reach out to us. We will give you a free review, and there might be value in ending it, right? If you're so far in, maybe you have to keep it, but it's the same thing with annuities. These are insurance products. They're not really investments. Okay, what I mean by that is the insurance company is taking your money and saying, hey, we will guarantee XYZ, right? We'll enter into a contractual obligation with you, and then they take your money. And then guess what they do with it? They go and invest it. Okay, you are not invested within a product as efficiently as you can be because they have to make money off of taking your funds and then investing it themselves. Okay, it's like adding an extra hand into the pot of your funds. Now, yes, there is a little bit of a guarantee that you get from an insurance policy. Almost none of it. Almost no insurance policy would be as good as if you just bought a term, okay, which is a significantly cheaper, low-cost insurance product. It's just insurance. and then you invested the difference. Okay. I would be happy to look at any IUL policy. I'd put that up to any insurance product that buying term and then investing the difference in a regular account is better. And I just wanted to reiterate that. You guys already know that I'm not a big fan of these products. Okay. That's just, they're so expensive, and it's usually really great for the advisor or the salesman selling it in the insurance company. And then it's not so great for you. And you would never know because you're trusting this guy. You're like, oh, I got a guy. This guy's taking care of me. When in reality, if you just spent maybe 15, 20 minutes and looked into the details and the other options out there, you'd be like, oh, this guy didn't do the best thing for me. This isn't in my best interest. This isn't really what I wanted. Okay? And that kind of breaks my heart a little. I'll be honest. And that's why I get so enraged at these guys trying to sell insurance. And there was man, I do feel kind of bad about this, but there was this young kid that came up to us. Maybe he was 25, right? I'm 32, so I guess he's a kid to me. But he's like, hey, okay, well, tell me about your business. And he gets out a notepad. He's got a suit on. And I start telling him, and he's like, oh, well, I'm an advisor too. Like, I work for New York MetLife or New York Life, MetLife. I can't even remember which one. And I just told him, I was like, hey, man, we don't do any insurance. Like, we don't sell insurance products. He's like, oh, well, that's okay. Like, I'm happy to be your resource to do it for you. I was like, no, man, like, I think that's evil. Like, I think what you do is bad for people. And he gets, I didn't say it in so many terms, but I was definitely very abrasive. Like, I'm done with this. And he, he's like, oh, so, okay, so no business together? And I'm like, no, what are you talking about? I just told you, I told him exactly what I do, right? I run this investment firm. We do tax and wealth management. We're comprehensive. But we're not a big fan of insurance. We think term is the only way. Like, I think I said that to him specifically. Like, there's nothing better than term and investing everything else. I think I broke this kid's heart. He was just like, and then just walked away. We didn't finish the conversation. It didn't end well, right? It just ended. And I have thought about how mean that was of me for I got back yesterday, or we got back at like midnight on Wednesday. So I've had now a little over 36 hours to think about this, but man, I feel bad. But at the same time, that's really how I feel. Like, I get my blood boils. Okay. Please don't get got by an insurance salesman. Speak with the fiduciary advisor. That term is blown up out of proportion, but insurance salesmen are not fiduciary advisors. Okay. They do not have to do what's in your best interest. What they're waiting for is a hole, and they're going to try and quickly fill it with an insurance product. The more that they talk to you, it has nothing to do with about being an advisor. It has everything to do with filling whatever hole on your street they can with insurance products, right? They're potholes. They're trying to fill it up with their stuff. Okay, all right. I am done. I got my 3 minutes of ranting in. We're at 18 minutes. That's almost 15. I'm gonna call that a win. Okay, guys. As always, we'll see you next week. Invest early, invest early, invest often. We'll see you next week.